Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the Euro US dollar FX for Tuesday, January 15th, 2013. Well, a change of trend today, and candle has made a lower high and a lower low. Yesterday I highlighted the spinning top cut type candle and alerted everyone that there was strong potential for a change of trend, and today we've seen confirmation of that change of trend with a very solid bearish candle, a very large black body candle where the sellers have taken control of this market, and they've shown some fairly strong commitment to taking this market lower. The important thing with this candle here is that the market closed down below this important resistance level around this 133.20 level, and that does suggest that there is potential for the market to trade to lower levels. But if we look closely here, you can see this swing high in the recent past around this 133 level where the market was rejected from, and the day following that, and then subsequent retracements back up to that level, and the very strong price rejection from that 133 area. And look at what's happened today. We've had upside price rejection from that 133 area. Previously strong downside price rejection, and now upside price rejection, and that does suggest that this is a very, very important area now for this market. Not the 133.20 level, but this 133 area, and this area has potential to act as resistance and support in a zone down to around the 132.50 level, and we can see that the market today extended down to 132.60 and was rejected from there. So moving forward tomorrow, 133 and down to around the 133.50 level will be very important if this market is going to continue to trend to the downside. In terms of Ichimoku, we have a bullish market in all three timeframes, so the market is trading above the clouds. So we have a bullish market in the long-term timeframe, bullish in the medium-term timeframe by trading above the Kijun-sen, and also bullish in the fast-term timeframe by trading above the Tenkan-sen. The Kijun-sen and the Tenkan-sen are both pointing flat, and let's ignore what we're seeing at the moment with this Kijun-sen pointing up. That's reflecting what's happening in the market at the moment. But that flat Kijun-sen has attracted price action back towards that area, towards equilibrium represented by those indicators, and there still is a possibility that we could see the market continue retracing back towards those indicators, so we do need to be aware of that. As I've mentioned, however, the limiting factor is this very strong potential for support down below here, but there still is a possibility the market could retrace back to around the 132.50 level. Now, yesterday we looked at the Fibonacci extension, and we examined the relationship of that first time frame uptrend that the market was into the previous time the market was trending up, and here we saw the market test exactly to the 261.8% on a weak candle, and we had a perfect setup for that change of trend. And here we've seen very strong selling by the bears throughout the trading day today. In terms of the current Fibonacci extension, here we're now looking at the relationship of the first time frame downtrend to the previous time the market was trending down, and we've seen the current candle take out all of the major levels and test down to the 100% level and just below there, and we've seen the market rejected from there. That does suggest that there is some potential for a change of trend. That level coincides with the 133 level and that swing high in this area of very strong price rejection to the downside. So there is a good possibility that we could see this market change trend. But if we look at this candle, the sellers are still in control of this market, even though we did have this upside price rejection and this lack of commitment at the end of the trading day. The sellers still have control, and the buyers really don't show any strength in this market at the moment. Looking at the Fibonacci retracement, there is a possibility that we could see the market rebounding off this 38.2% level with this strong rejection, but as I've said, no confirmation of that happening at the moment, with the sellers still being in control of this market. So in terms of how this market is trading, it's bullish in all three time frames. We have the Chikou span up above the corresponding price action, confirming this bullish activity that we're seeing. The market is looking a little bit overextended. We are trading a long way above the cloud. The market today is now attempting to find equilibrium in these three time frames and has retraced back down towards the Ichimoku indicators. There still is a possibility that this market could trade lower, but we do have very strong support down below. But with the lack of strength from the buyers, there's no suggestion at the moment that the market will change trend and start trending up. There's a possibility the market could test down to around the 133.50 or even 40 level and perhaps bounce off there. But what we'd like to see at the moment, if you are looking to go long and trade in line with the Ichimoku indicators, is some sign of strength from the buyers, and we're not seeing it at the moment. It's probably best to wait, be patient, wait for that strength to come into the market. Strength could possibly be seen by the market trading in a bullish manner up above the 133.20 level, and then certainly up above the 134 level.